Hello all, welcome back to Current Affairs Hitlist series. I'm Guna Mathivanan, Current Affairs faculty from Officers IAS Academy. Friends, today we will be discussing regarding composition scheme. So composition scheme is related with GST, right? So I have done few videos related to GST. Please go and watch all those videos so that you will understand composition scheme in a better manner. So let's assume, we'll take an example. Now Guna is a manufacturer. Guna is a manufacturer who is manufacturing different items. He is manufacturing different items. Each item, let us say he is manufacturing item A, which is coming under GST slab 5%. Guna is also manufacturing item B, which is coming under 12%. Guna is also manufacturing item C, which is coming under 18%, and he also comes up with some items which is coming under 28% slab. So Guna is coming up with various products, and each product is coming up with different tax slabs. Okay, some products, let's say, which he is producing, which is coming under 0.5 percentage of tax slab. Let us imagine. Now, whenever Guna sells, so Guna is going to be the seller. So Guna is going to be the seller, and whenever Guna sells the products to consumers, so consumer is going to be the buyer. Whenever Guna sells, what happens? Let us assume Guna is selling 100 rupees worth of product to the buyer. So 100 rupees worth of product for which GST has to be paid. Let me assume for this product GST is 5%. So the buyer is going to pay 105 rupees to Guna. So Guna is a seller. He is selling a product worth 100. Okay. Now that 100 rupees for the product comes under 5% category. Imagine. So ultimately the buyer is going to pay 105 rupees. So what Guna will do? So in this 100 rupees Guna will retain. The another 5 rupees, that is a GST amount, tax amount. That GST amount will be given to the government. That is called as GST filing. Every month Guna has to file that returns. Every month whatever GST he is collecting from the consumers, he will give it back to the government. Right? So here Guna is coming up with different products. A category item is 5%, B category item is 12%, C category item is 18%. So when he is selling these products, he has to raise proper invoice. For example, instead of 5%, if he is putting 12%, or instead of 12%, if he puts 28%, instead of 28, if he is putting 0.5%, if he does a manual error, when he is raising the invoice, when he does a manual error, that is going to cost him heavily, because a GST payer has to upload all the invoices, all the bills has to be uploaded in a particular format in the GST network. Only then the tax refunds becomes easier. We have discussed about tax refund, input tax credit in the previous videos. Please go and watch if you are new to this video. Right. So Guna, since he is coming up with variety of products, he has to be very careful while raising invoices. Right? And all these taxes, all this GST collected, has to be returned to the government every month. Every month, the GST collected should be returned to the government. So proper invoice we have to raise, properly we have to upload in the GST network, and every month we have to return the GST collected to the government. So a big company, a big firm, a rich firm, when they make more money, all these will not cost much. They will be having more number of auditors. They will be having computers to raise the invoices. Right? For different product, if we have different barcodes, we can scan with the gadget and we will not make any mistake. In supermarkets, they used to scan the items, right, with the help of some gadgets. So if Guna is a big manufacturer, if Guna is making huge amount of money, then buying a gadget, right, appointing an operator and paying for the auditor for filing every month will not be an issue at all. But think about small business players. Think about small service providers. For them, the compliance cost of GST is becoming higher because of all these multiplicity of taxes. Every month you have to file the returns. All the bills properly you have to upload. All these is increasing the compliance cost. So, to help the small taxpayers, to help the small GST payers, government came with a scheme called as Composition Scheme. So, under this Composition Scheme, if you are a small businessman, right? So, if your business is connected with goods, if you are doing a business based on goods, you are manufacturing certain goods, you are trading certain goods, if your business is with respect to goods, and if your turnover, if it is less than 1 crore, if your turnover is less than 1.5 crore, then you will be called as a small business player. Then you will become eligible for this composition scheme. Right? So, in government terms, a small business player is one who is earning less than 1.5 crore turnover if he is dealing with goods. If he is dealing with services, if he is a service provider, if he is dealing with services, service provider, it might be a parlor, it might be a music academy, it can be an IAS coaching center, right? All these are service providers, right? So, if a service provider, if that person is a service provider, if the turnover, if it is less than 50 lakhs, if the turnover is less than 50 lakhs, then the service provider can opt for composition levy. So, if someone wants to opt for composition levy or composition scheme, the eligibility criteria is the turnover should be less than 1.5 crore if the person is dealing with goods, or the turnover should be less than 50 lakhs if the person is dealing with services. Then you can opt for composition scheme. So what will happen if someone is opting for this composition scheme? If a person who is dealing with goods or person who is dealing with services who is meeting this eligibility condition, if they want, they can choose this composition scheme. If they choose, what will happen? Number one, the multiplicity of tax rates problem will be solved. There will be a flat tax rate. For example, Guna is a manufacturer. He is coming up with a variety of items. Each item comes under different tax slab. In our example, Guna is manufacturing different items. Each item is coming under different tax slabs. But if Guna is earning less than 1.5 crores, then if Guna opts for composition scheme, then there will be a flat tax rate. I need not collect these differential tax rates. I might produce different products, but I need not put different tax rates. Rather, there will be a flat tax rate. What will be the tax rate? Just 1%. Just 1%. I might produce different items, but if I opt for composition scheme, then I need not put different tax rates for different items. I can simply charge 1%, irrespective of the type of the good, just 1%. Right? Provided I am dealing with goods. So if I am a service provider, Guna is providing services. If Guna is a service provider, so services, right? If I'm providing services, then the tax rate will be flat 6%. If Guna is dealing with goods, then the tax rate will become flat 1%. If Guna is dealing with services, then it will become flat 6%. So the biggest problem is addressed. I might produce different items which might come under different tax slabs, but now if I opt for composition scheme, everything is going to be one tax rate. So I will not do any mistake. I am selling this pen 1%. I am selling this mobile phone 1%. I am selling this remote 1%. Right? There is no multiplicity of tax rates. That is the biggest advantage. Right? Now, the next problem what we saw, every month we have to file. The normal GST payers, every month they were filing the taxes. Every month they were filing the taxes. But now you need not file. If you are opting for composition scheme, you need not file every month. Quarterly filing is allowed. Quarterly filing is allowed. That means I can file every 3 months. Once in 3 months I can file. I need not file the GST returns. Every month I need not file. I can file once in 3 months on a quarterly basis. I can file the returns. So every month I need not pay money to auditor. I'll be paying once in 3 months. So multiplicity of tax rate problem is addressed. I need not file taxes every month. I can file once in 3 months. So this composition scheme is actually making the life easier for small GST payers. That is the idea. But however, this also comes up with certain conditions. This also comes up with certain conditions. What is the condition? What is the condition? Number one, the tax rate. What did I say? For manufacturer or trader, it is flat 1%. For service providers, it is flat 6%. The tax rate should not be collected from the consumer. Right? Usually what happens? Guna is the seller. And there is going to be one buyer. Usually the tax will be paid by the buyer, right? Usually the tax will be paid by the buyer. But if someone is opting for composition scheme, if Guna is opting for composition scheme, in that case, this tax should not be collected from the buyer. Rather, it is Guna who has to pay the tax. So condition number one, the taxes usually will be paid by the buyer. But if you are a composition scheme beneficiary, if the seller is a composition scheme beneficiary, then the seller should not collect the tax from the consumer. Rather, the seller should pay the tax from his or her own pocket. If Guna is the seller, I have to pay the taxes. This is the first condition. Second condition, Guna, in our example, Guna is not eligible. Guna is not eligible for tax refund. What is this tax refund? We have discussed. Tax refund is nothing but the input tax credit. We have discussed about this in the previous video. So if Guna is opting for composition scheme, first condition, Guna has to pay the tax. The seller has to pay the tax. From the buyer, Guna should not collect. Second thing, when Guna is opting for composition benefits, then Guna will not get tax refunds. Guna will not receive input tax credit. The third point, Guna cannot engage in interstate trade. Guna cannot engage in interstate trade. So if someone is going to opt for composition scheme, remember all these things. You cannot collect tax from the consumer. Rather, that is, Guna cannot collect the tax from the consumer. Guna has to pay by himself. And Guna will not be eligible for tax refunds. And Guna cannot engage in interstate trade in this example. Choice is yours. If you want, you can opt for this GST composition. If you are not interested, you can go with the original GST regime. Go and file multiple tax, collect multiple taxes, file the tax revenue every month. Right? But if you want to opt, yes, you can opt. But remember these points. And there are some exemptions. So if you are dealing with products like ice creams, tobacco, then you are not eligible. You are not eligible to apply for composition schemes. Right? Simply remember, there are certain items for which even if you are eligible, but for certain items, composition schemes are not available. Right? You got it? You got some clarity? So the simple objective of composition scheme is the GST reform is coming up with a lot of compliance cost for the small taxpayers. The small taxpayers, they are finding it difficult. To make their life easy, government came with composition scheme. If you are dealing with goods, if your turnover is less than 1.5 crore, you can opt. If you are dealing with services, if your turnover is less than 50 lakhs, you can opt. But however, this comes up with certain conditions. The seller should not collect the tax from the consumer. The seller is not eligible for the tax refund. The seller cannot engage in interstate trade. Between the state trade, he cannot engage. There are certain items which are exempted from getting benefits from this composition scheme. I hope you got some clarity. So here I have given the slides regarding the composition scheme. You can go through. You can pause the video. You can go through. You can make precise notes if you want. Right. So there are items like pan, tobacco, ice cream manufacturers. They are not eligible. They cannot opt for composition scheme. So here I have given a multiple choice question. Find out the right answer and give it in the comment section. So again, I'll meet you with another important, interesting current affairs topic. Till then, bye. Take care.